Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of a Chinese regulatory ban on Aussie meat exports. But first, the US Federal Reserve kept interest rates unchanged in today's review and said it expected to start winding down its massive holdings of bonds relatively soon. Markets have taken that as a sign of confidence in the US economy. American stock indexes touched fresh intraday highs today, boosted by the latest batch of corporate earnings and higher commodity prices. And part of that relates to a new drive for yield by investors. Investors are piling into corporate debt harder, driving down the spread to benchmark government bonds to a level we haven't seen since before the GFC. The spread on US dollar corporate bonds, the extra yield investors' demand versus Treasury debt, has fallen to within 2 basis points of its post-crisis low for investment-grade securities. The 108 basis point spread recorded yesterday compares with 130 basis points at the start of the year. It got over 600 basis points in the GFC. Current junk bond spreads of 355 basis points are down from 422 at the beginning of January to just 20 points above their 2014 low. The basis for ignoring current bond risk is hard to fathom, but even CDS spreads are at their post-GFC lows. Meanwhile, sales of newly built single-family homes in the US, albeit a small slice of all American home sales, increased in June to an annual rate of 610,000, which is more than 9% above the same month a year ago. The median price of a new American home is now $310,800. In Australia, 6 of their meat companies have been banned by the Chinese for shipping any product because labels do not comply with Chinese regulations. It is a serious blow to their $750 million trade. But this ban may be in retaliation for an Australian decision to ban all imports of fresh and cooked prawns from China. It is a cautionary tale about how heavyweight trade partners can abuse their dominance in a way that the smaller one can't. We are swimming with sharks here. In New York, the US Treasury 10-year yield has slipped sharply today following the US Fed review and is now down to 2.29%. The price of oil rose again overnight and now just over $48.50 a barrel, while the Brent benchmark is now just under $51 a barrel. The price of gold, however, is slightly lower again, down $4 to $1,247 an ounce. And the Kiwi dollar is up sharply on a weakening greenback, now at 75.1 US cents, and that is its highest in 27 months. On the cross rates, we're now up as well to 93.9 Aussie cents and 64 euro cents. As a result, the TWI index will start today at 77.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.